Yeah, Rick has a good question. Really, how do you SPY T trade? The reality is SPY T trading was created out of necessity during a time in which I was developing the algorithms during a very volatile time. Over time, I started to develop different SPY T trades. The first one was the SPY T A trade, and then the SPY T B trade, and C and D and so forth. And they worked pretty well. And ultimately, I decided that the SPY T S was probably the best trade out of them all because it was the most consistent. However, as volatility started to come down, the SPY T S started to fail. So I had to experiment a little more. During this 4-year experiment, I've learned a lot of lessons and I've refined my knowledge and approach to SPY T trading. And that's what this video is kind of about, bringing it all back together. Now, I am going to soon create a longer webinar that will be available at spytomorrow.com, but this video should get you started to really understand how to SPY T trade. So why would you even want to SPY T trade in the first place? Well, I have a few answers to that, and the first one is an observation. Noticing the overnight gap. When the market starts at one point at the close and then the next morning it's either higher or lower, well, that's a gap and that's an opportunity to make money. The other thing is a lot of people are just tired of day trading. Day trading can be very lucrative, but less than 10% of people actually do it well. And I'm not saying everybody's going to be a successful SPY T trader, but I think because of the way it's set up, the ratio is a lot higher than 10%. So as I mentioned, we notice that the market closes here. And then the market continues up and down until morning. And then the market went down. How could we have taken advantage of that? And that is where SPY T trading comes in. I'm going to make an assumption. You know how to buy and sell options. And if you don't, this is probably not the strategy for you yet. This is for someone who understands why they want to take advantage of the overnight gap, that they already have tried maybe day trading or other types of option strategies, and they just want some type of active but relatively passive method that will allow for them to use their high-risk trading account and grow it over time. There are 3 parts to SPY T trading, and I'll dig a little bit deeper into each one of those in a few moments. But the first one is the timing. We buy at the end of the trading day, the last seconds of the trading day, and we sell the next morning. The next thing is the ratio trade, usually 2-to-1 or 3-to-1 options ratio. That's what I'll get more into in a few moments. And then lastly, is the signal. Now we can use any signal we want. If you have a good system that tells you, hey, generally it correlates to the market going up or down, hey, use it. There's nothing wrong with that. But that's what we provide at spytomorrow.com, the up or down signal. And that's free at 4 o'clock Eastern Standard Time. So what is considered a correct pressure reading? Obviously, whether we gain or lose dictates how we feel about the trade. However, the pressure reading is considered correct if it says up and the market goes up within the first half hour of the trading day, or if our indicator said down and it goes down the first half hour of the trading day. Now, our percentage would be much higher if we gave ourselves the first 45 minutes or hour or even till noon, but we got to cut it off somewhere. So we use the first half hour as our gauge. Some people still like additional signals during the day or even like to use them for day trading. I'm not one of those people, but we do give pressure signals every half hour in the member section. Certainly one of the main reasons why we like to use SPY and QQQ and IWM is because they're highly liquid, which means when we buy them, we can buy them fast, but even more important, when we need to sell, we can sell pretty much immediately. So it's harder to get stuck in that trade. Before you do anything, you need to decide how aggressive or conservative you want to be. And of course, that's relative because this is a high risk, high reward trading approach. But you have a few decisions to make, such as if you're going directional. I'll talk about that in a second. Or are you going to be more aggressive with your SPY-T trade, such as a SPY-T Q trade? Or are you going to be more conservative if warranted with a SPY-T S trade? Also, your expirations. If you're going to trade options, then how far is your expiration? The further out, the more conservative you are. The closer to expiration that you trade, such as 4 to 7 days, that's kind of my sweet spot, the more aggressive you are in your trading. The more you can make, but of course, the more you could lose overnight. The next consideration in terms of how aggressive you want to be is determining what you're going to trade. Are you going to trade stock? Are you going to trade ETFs or possibly leveraged ETFs? Or are you going to go all out and trade options? It's important to understand how options work, especially time decay, theta. Look into that because that's important, because you're going to lose a little bit of money overnight no matter what, especially if the market opens flat. When we first started trading, we were using SPY, and that's why we have spytomorrow.com, and I built my algorithm around SPY, SPY, which is the ETF that mirrors the S&P 500. And during that time, SPY had high volatility. We're talking 25, 30, sometimes even 30 IV, which is very volatile, especially for SPY. However, over time, that went below 20 and even further. And so I switched over to QQQ, which had more volatility. But then once again, that started getting under the 20s, and really between 20 and 30 IV is our sweet spot. And right now, IWM fits that bill. Although I acknowledge the importance of volatility in options trading, because really that's the key component of successful options trading. Some people depend on high volatility and some depend on low volatility depending on your strategy. However, it wasn't until the fall of 2023 that I started to actually seek out ETFs and stocks that were more highly volatile, which would give me a higher success rate, especially on the days I was wrong. As a SPY-T trader, depending on the algorithm over at spytomorrow.com, there are some disadvantages to using other stocks or ETFs that are not SPY. And that's because the algorithm that we depend on is based off of SPY. So if our ETF is not in sync with SPY, we could have more wrong days. And that tends to happen a little more often with the IWM versus the QQQ. So each trading day, my plan is to head on over to spytomorrow.com to see if the signal says up or down pressure at the end of the trading day, which again correlates to how the market might open the next day. And over the long period, it tends to be around 75% correct. But we have to be prepared for those other 25% of the times it's not correct. So I take a look at maybe the news. What could happen after hours? Maybe there's economic news or earnings coming out the next morning or right after the close. And I'll take that into account, and that will help me decide how aggressive or conservative I'll be in that overnight trade. I generally depend on the up and down signal, but I also like to look at the confidence number. The confidence number is really a pressure number. How much pressure is there? Sometimes when the pressure is really high, that's because expectations seem to be really high for a result. And if the market is disappointed the next morning, it can really zoom back, snap back the other direction. So you have to be prepared for that situation. But there are also other algorithms within SPY Tomorrow that I like to take a look at. And if they're all in sync, it gives me a lot more confidence as to what might happen the next morning. The initial SPY-T trade that I started with is the SPY-T A trade, which is a 2-to-1 options ratio. And you work with options just in the money or at the money. So if the indicator said up, you would buy 2 call options at the money and 1 put option at the money. Now, these are not original strategies. It's called the strip and the strap strategies in options. Options traders already know of these. A strip means you're pointing downward. A strap means you're pointing upward. But we've expanded this and we just refer to them as SPY-T trades. I like to use the SPY-T A trade for larger accounts because it tends to be much more expensive. I'll also use the SPY-T Q trade, which is a 3-to-1 options ratio. Actually, I like that one a lot better because I tend to be more aggressive in my trading, but it is also a lot more expensive than the other SPY-T trades. During the 30-day challenges, at least at this point, I tend to focus on the SPY-T B series of trades. So if I notice something coming after hours that could very well change the mood of the market overnight, such as earnings or an economic report, I'd be a little more conservative and I would focus on a SPY-T B trade, which means if the indicator said up, I would buy a call at or just in the money and a put about half the price. If it looked like clear sailing, then I might be a little more aggressive with a SPY-T B Q trade, which would be a call at the money and a put at a quarter of the price. But the trade I've been using as of late is the SPY-T B T trade, which means if the indicator said up, I would buy the call just in or at the money and the put 1/3 the price. So here's an example I've used in other videos. If the call was $1 or $100, I would buy the put at 30 cents or $30 for a total buy of $130. Now let's say I traded the IWM and it went down 1% the next morning. Well, I very well may have lost half of my money, but that put would have possibly doubled in price. So if I lost half my money, that call would be worth about 50 cents, and that put would be worth 60. So I would still have $110. And if everything went my way and the IWM went up over 1% and I doubled my call, well, then that call is now worth $200, and that put is probably worth about half. So the put's worth 15 cents, and the call is worth $2. So the total, $2.15. So take 215 and subtract 130, you have $85 profit, a 65% gain. That 65% is not on the entire account. I certainly hope it was not, because you don't want to trade 100% of your account every single time. You want to take a percentage, a position size, based on how aggressive or conservative you wish to be. You can be very conservative by using 1, 2, or 3% of your account, maybe 5 or 10% of your account. If you want to be more aggressive, maybe it's 20, 30, or 40% of your account. I find the sweet spot is actually 25 to 30% of the account. A lot of that has to do with how often your indicator is correct and how well you trade when you exit the next morning. I head on over to spytomorrow.com and I see that the pressure signal says up. And it looks like clear sailing. No economic news or earning news expected overnight. So I go with the SPY-T B T trade and I buy it during the last seconds of the trading day. Now, it's good to know when to buy, but it's even more important to know how to sell, when to exit, because that is what's going to make you a successful trader. Selling is the key to maximizing your gains and minimizing your losses. I really like it when the market gaps up in the morning and then I can sell immediately and then follow my put all the way down for additional profit. But sometimes I have to minimize my loss and the market gaps down and I'll sell that put and follow the call up as far as I can. Sometimes I make money even on wrong days. It does happen, but not always. And I try not to day trade too much because the fact is when I start day trading, I start to lose more money. In the beginning, I recommend you start paper trading. Test the system out before you put real money in. And once you put real money in, buy at the end of the trading day and sell pretty much immediately after the market opens the next day. Eventually, you'll learn better techniques in terms of your selling. You may develop some indicators that help you, such as VWAP or money flow or MACD. They may give you some indications of when to exit in the morning. But the nice thing about SPY-T trading is we tend to focus on one stock or ETF, which is helpful because you get to learn the price action. You understand the options. You understand that one stock really well, which helps you make just better decisions overall. Here is the really hard part, and I just did a video on this a few days ago, and that is letting go of your trade. Get into your position at the end of the trading day and let it go. Don't continue to watch the market until maybe an hour or a half hour before the next trading day so you can develop a plan on how you're going to exit. But trust me, after hours markets are going to drive you crazy. Just because it goes up after hours doesn't mean it won't be down the next day. Even from 5, 6, 7 a.m. in the morning Eastern Standard Time, the whole market could shift. And that shift usually happens around 8:30 Eastern Standard Time. Quite often there are some news or market shifting, or that's just when the big players start to prepare and get into the day. That's when you want to start looking at the market, an hour before it opens. Before that, just let it go. My best piece of advice for longevity is not to dwell on the day-to-day. Look at this as a week-long project, a month-long project like the 30-day challenge, or even a year-long project. The key here is that if we're right more than we're wrong, and we maximize our gains and minimize our losses over time, we're going to be winners in the long run. The fact is, there are times in which the market is just flat, and you may want to look for more aggressive ETFs or stocks during that time. And there are times in which our ETF or stock goes the complete opposite direction of the SPY. And of course, market-changing news can happen anytime overnight. That's why we have to take the long approach. We're all heroes and geniuses when our indicators are in sync with the market. However, it's the people who can manage through the rough times that win in the long term. There are many elements of SPY-T trading we have control over, and one is to not ask what happened after we went directional and risked more than our risk tolerance allowed over and over again, doing the same thing that was not working during our SPY-T trading. That's why sometimes we need to take a break and step back and paper trade a little bit, and then look at the best SPY-T trade for us. There are things we have control over: when we buy, when we sell, what type of SPY-T trade that we use, a SPY-T A, B, C, D, Q, S, and all the variations. And of course, our expiration time frame. Are we more aggressive with a 4 to 7 day range, or are we looking at 30 days, a much more conservative time frame, which produces a lower return but less risk? And if there's market-changing overnight news headed your way and you're just not sure which way the market might go in the morning despite your indicator, well then don't trade at all. That is the sign of a mature trader. SPY-T trading is an overnight swing trading, generally using a 2-to-1 options ratio, following the SPYtomorrow.com signal. We buy at the end of the trading day, we sell in the morning, and we do it again the next trading day. And I'll see you in the next video.